I thought it might be a good idea to do a tutorial on this Prego case since in class it didn't show up on the accordance system. So here we're looking at the Prego data. Again, I assume you've read the case and we're in class, but we have three columns: time, market, brand, account, and value. So this first line we read as, in the first period in New York, Prego's price was $3.19. In the first period in New York, Prego's percentage of stores distributing was 85% of them distributing. In period 2, etc. And I'm just going to do a Control A to select all that data, and then do a data pivot table on that. And it's going to come up automatically with something apparently from leftover. But what I have is market in the rows. Let's see, I'm going to change this now. And we're going to have values in the values, but I'm going to have a page, a report filter of market and account. And then on the rows, I'm going to put time and brand. And so this is your basic situation for analyzing this case. And we're going to pick, right now this number means nothing, a number in a cell, because it's the sum across all the markets and across all the accounts. So that's the sum of New York and Chicago, etc., as well as summing across the price plus the distribution. It's a meaningless number. We have to pick, therefore, a particular market. So deselect all, pick New York. And then we have to pick an account, and the accounts here are advertising, display, distribution, price, etc. So I'm going to deselect all and pick units. All right. And now I'm going to do this trick of copying all this out into a table next to the pivot table so that it updates a dynamic table. So I'm going to say equals in this cell, and I'm going to pick this Prego label here. Okay, so I've copied that. I didn't cut and paste. I copied it with an equals. This cell equals that cell over there to the left. And now I'm going to be able to drag that and populate another table over here that's a direct dynamic replicate of this one. So if anything changes over here, it's going to get changed over here. That's the trick of it. And I'm going to get it spaced smaller, and then I'm going to highlight it so that we can see it well. Okay, and then I'm going to create another table over here the same exact way. So this equals that first label over here that I want. Okay, and this one's going to be share now. So I'm just going to count 2, 3, 4, 5 brands. And then I'm going to say that this equals the first, or Prego, amount of sales divided by the grand total. That's what we mean by share, isn't it? And then I'm going to go in and say I want always to look at column G. So I'm going to put a dollar in there. And then I'm going to be able to populate this entire table here with market shares for each brand over all the time periods. Okay, and then I'm going to knock off zeros just to get it down to 3 so it's easy to read. And then size the columns so that they're as small as will fit. And once again, I'm going to put on the borders. And now I'm going to create a chart of the brand shares just to do this. Well, first let's chart, we could chart the all commodity volume, which is the total across all the brands here. And just do a chart of that. So if we go to charts, and this will show us the seasonality. So we do a line chart of that one thing, and we see that there is, in fact, a very stable market seasonality here. I'll do a label on that one. And we can see that, there's a high period. So this is a year here. There's 4 years of data, so we see 4 peaks. And so the first period, the second period, the third period, the fourth period is high seasonality. 5th, 6th, 7th, and the 8th is, and the 7th then here is the low period. So the first, each 2 months is a period. These are called bi-months. This is December, January bi-month. December, January, February, March, April, May, June, July is the high in the summer, etc. Okay, and you can get trend on this very easily by right-clicking and go add a trend line. Since there's an equal number of periods here, we can get away with this. And just display the equation on the chart. Okay, and then we can bring this up and maybe up the font a lot. And that, in fact, is the number, since X is time in this chart, that's the number in millions of units per period that the market's declining. Okay, so now on to the most important part of this. Since that is very stable in seasonality, we can analyze this in terms of this market, or this effect of the promotion, in terms of the share shift. Because if you know the period, you know the seasonality and the trend, you can predict almost exactly the total number of units in the market. But not the share, because that depends a lot on the promotions. We now know, because of the stability of this chart, that the promotions are largely affect only secondary demand or share for a given brand. So if we were to chart this, we get an interesting result. And here's a line chart then across all the brands for New York, and we can highlight Prego by picking it. It's this top one here, so it's this one. And then I'm going to right-click there and format the data series. And I'm going to try and get that line marker to be black instead of what it is, and maybe up the weight of it a little bit. It's a little more pronounced. That's the one we're focusing on, which did not work for me. Okay, so I'm going to go back in, format. Is it this line here? So black, and then weight up to a little higher, and say OK. And so there we got it. And then I'm going to take the labels inboard here to have more room for the chart. Okay, and so now here we have a chart of share, and this is share is clean with regard to seasonality variation. That's the beauty of this. The share doesn't have anything to do with seasonality. That's already taken out. So what we care is our share shift, and once we know that, we can multiply the share shift times the number of total units, or all commodity volume, all category volume it's called, or in New York, and we're looking at this period 19 here, and there's period 19. We had a huge market share. Our average or typical market share is down here around 20%, but in this period we had almost 30%, so close to over 10% extra per share. Okay, so let's calculate that here. So our average share we might take to be our average over all 4 years of market share. Okay, and then our extra units, extra share would be equal to our share in this period 19 we're noticing is very high, less our average share. And that turns out to be about 0.107 or 10.7% share. Based on that, we can calculate our extra units, which is going to be equal to the units in the total market that period times the extra share of it that we get, okay, and then times a million, because this is all in millions. And so we find that we got 866 extra units. Okay, and from that you can go in and do the profitability analysis. So I'll stop here. I hope that has helped you get over the hump and able to see how this is all working. So because we have stable market share, the promotions are not generating any extra units in the total market. Therefore, we can analyze everything from a share shift point of view, and we see that we did get a big share shift in period 19 in New York. And then we could get our share that period, 19, minus the average share. And that turns into our extra units, which is average share increment, or extra share, times the all category volume. Okay.